Hey, another great day at the Solomon Training Institute. Hey, it's a pleasure and a joy to be able to talk to you. Hey, listen, if you want to know more about what we do, as always, you can go to our website and kind of just look around and kick the tires and things of that nature. Just look at some of the trainings and just look at some of the things that we have going on. But one of the things that you're probably going to want to do, I would imagine, is to book a call. That is the way we can kind of see whether or not it's a good fit for you and us, and see if we can, help. One of the key things that I realize is that most people don't understand economics from a macro and a micro perspective, and also they don't understand the mixed market that we live in terms of being capitalistic society, how part of it is social and part of it is capitalistic. Well, if you don't understand that, you don't understand capitalism. What drives it is liquidity, money. In other words, for companies to do what they do, for the world to go around, money has to grow and it has to move so that everybody can get a piece of it. Well, it grows within this system, and when you understand the economic system, then you understand money markets and where money markets have their place. Then you also even break it down even further to say, hey, money markets has its place, but there are two types of approaches. One is a full broker approach where you allow someone else to manage your money for you, make all the decisions for you, whether to buy, to sell, in terms of growing your portfolio or your pension fund or your 401k or your 403b or your TSP or what have you. But you can also do this yourself when you understand that, and that's what we teach, and that's what we're a proponent of. We believe, beyond a shadow of a doubt, that it's God's will that you prosper. It's God's will that you not have to figure out how to pay bills, not have to figure out how you're going to send your kids to school, not try to figure out any of those things, because we live in a country that has $449 billion. I know you hear that baby crying. I stopped at McDonald's, turned on my personal hotspot so that I could trade. I did that, and then also now I'm doing this recap for you. And I didn't, it's real life. What we're doing is real life, and you can actually do it anywhere that there's a Wi-Fi connection. So, but we have one of the richest countries in the world, right? And so we are one of the strongest markets in the world. And so if you understand how to engage the market, then you can't help but, be successful. So really, I just believe that it's His will that you prosper. That means to go over, be the top, not the bottom, the head, not the tail. Always dominate, not being dominated, not in any area of your life, and especially in finances, in one of the richest countries in the whole entire world. So I want you to look at this. You can text the word profit to 94253 if someone told you about this to learn more information about what we do. Here's the book that I wrote, Money Market Autopsy, How We Kill the Market Every Single Day. And thank you so much. The lady from McDonald's just gave me a free cup of coffee. All right, so Money Market Autopsy, bam. That's the book that I wrote. So now, again, as I always kind of talk about, it's so important to understand and to recognize that markets work in a particular way. Markets are always vacillating between fair value and market value. So if you can figure out what the value is, and we do that through our tools and through our software, then guess what? You will be able to know where the market is going, because the market is always seeking value so that it can sell what it has to people who actually want it. Now, again, I can't say this enough ad nauseum, because we have to follow the government's rules, and you must understand and know that there are no guarantees. I want you to read that, look at that, take a screenshot of that, and kind of look at that. So there are no guarantees in what we do, but what we do guarantee is that we'll teach you a skill that will allow you to potentially have a change in lifestyle. All right. So, for example, our goal is simple. Our goal is just to get you to be able to learn the skill and to be able to trade 20 days and make $400 a day. But what I want to do, and I think I'm going to do this from here on out, The money is one thing, but it's really not about the money. It's not really about the $400. It's really not about the 5,000 and earning the 8,000. That's really not the most important thing that we can discuss. The most important thing that we can discuss is the skill development. And what do I mean by that? That means we need to translate this $400 number, right? $400, $400, and make this not so important. But what's important is in order to get that $400, it takes 80 ticks. So when the market moves up from one price to another price, it's referred to as ticks. The market moved up one tick. So really this $400, that's not really what's important. What's important is developing the skill to be able to engage the market in such a way that when you engage it, it goes at least 80 ticks. That's really it. So really it's not about the money, it's about the ticks. Why? Because if you take 80 ticks with one contract for a month, it's $8,000. But if you take that same 80 ticks with 10 contracts, it's $80,000 a month. You see? So you see how it's not really the money that's important, it's the ability to be able to get 80 ticks. So I want to talk about that, and I want to look at our recap from now in another vein. I want to look at it from the standpoint of ticks. Again, this goal can be done anywhere. This is literally a picture. I asked the employee at McDonald's to take a picture of me. I'm traveling down the road. When it was time to trade, I pulled over to the nearest McDonald's. I came in, I plugged in, and I started trading. And I did what I'm about to show you today. And when I finish this, I'm going to get back to my car and continue my trip. So that's really how it works. So now, the first thing that you have to understand is what we call forecasting. Forecasting. Now, when we forecast, because when we talk about making the money or making the tips, it's not luck. The first thing we have to do is forecast. Are there any news events or any announcement or any report that will affect my positions today? Okay. Once I ascertain that there aren't, the next thing I do is I want to identify the day type. Okay, what is the institutional interpretation for today? Is the intention of the market maker or the composite operator, is it their intention to move the market up today, or is it their intention to move the market down today? We know that the market must move on most days because that's how money is made, right? So what we do to get a jump on everything is we, in our forecasting phase, we determine the institutional leadership. Now, when I talk about institution, I'm talking about buy-side institutions as well as sell-side institutions. I'm talking about investment banks. I'm talking about hedge funds. I'm talking about prop firms. I'm talking about the whole landscape. You know, are they moving? Are they moving the market up or are they moving the market down? All right. So once I find that out and I get my forecasting done there, the next thing I do is I now need to identify major structures. I need to identify major structures in the market. Am I coming up on a high volume area, an area where the market may become choppy? Am I running into a major structure, highs and lows and things of that nature? I need to make sure of that. And then my momentum. What is my top down momentum? In other words, over the last week or the last few days, is the market moving? Has the market been moving fast? Has it not been moving fast? You see, all of these things are done, and we're not even talking about entering a trade. We're not talking about entering a position. What we're simply talking about right now is simply where should price go and where should price not go. We should know that, and we learn that in our forecasting. Now, after we do our forecast, the next thing that we do is we begin to do our recognition. All right? So if I believe that the market is moving up today, that the institutional interpretation is that we're going to move the market up, okay, well, then there should be some signs, and we have another chart that we look. What is my POP? My probability of profit. What is my POP? So my probability, I need to know that is the market moving from a balanced area on my chart to an imbalanced area on my chart or to an extreme area on my chart? What is the rhythm of the market? Yes, I know it's supposed to be going up because of the institutional interpretation, but I do need to see some probability, some statistical probability. If you're not, and we have all this inside of our software, but if you're trading and you don't understand volume and you don't understand migrating volume, you don't understand where volume is moving, you have no way of seeing that. You have no way of seeing the cumulative delta or divergence. You have no, if you're trading and you don't have a real way of understanding probability, I suggest you start, and I'm not the only person, and Solomon Trading Institute is not the only group in America who knows how to trade now. But what I'm saying is you need to seek some more information because what you're doing is gambling. Now, after I make sure that I have a good pop, now I need to know now my market structure. Has mitigation taken place? You see, the institutional leadership, they play both sides of the market. You have buy side and sell side institutions, right? And so they buy and they hedge against their positions. They sell and they hedge against that position, right? Okay, so the only way for me to know as a retail day trader who does not have all of the things that they have, the only way for me to know is to be able to look at the market structure and make sure that the mitigation has taken place. So whenever they buy against themselves, at some place they're going to sell against themselves to mitigate the first thing. If I don't know market structure and how to pick up on that mitigation, well, I don't know if the market is actually going to move, let alone it moving 80 ticks. All right. So after that, then guess what I do? Now I recognize momentum. See, I need to know not only is the market going up, I need to know it's going up strong and fast. I don't need to just know if the market is going down. I need to know if the market is going down strong and fast. Well, we have a way, and we have 4 checks that we use to confirm that we have momentum. We find mitigation spots to confirm through the market structure that the market is ready to move down. And then we know how to look at our probability to make sure that the market and value is migrating in the direction that we need it to migrate into. And if it's not, then what we do is we hold up. That is why what we are doing is not gambling. We must have the confirmation of everything that we are looking for. And I'll talk about this. And you're going to learn what to look at and what to look for. Did you hear what I just said? We're going to teach you what to look at. In other words, what am I looking at? You know, and I know that's ending a sentence with a preposition, and my mother probably would be cringing right now, but it doesn't make for good grammar, but it does make for good trading. What am I looking at? Do you understand what you're looking at? Do you understand what has happened pre-market? Do you understand what has happened yesterday? If you don't understand, then you don't have any historical way of knowing that the market is going to move in your favor. So that is one of the problems with cryptocurrency and other things like that. There's not enough historical evidence, so therefore it's hard to gauge and evaluate what's going to happen without knowing what has happened. But we don't have that problem in U.S. markets, and this market's been traded since 1913. The futures is something that has been added, a derivative of the S&P and of the NASDAQ, but we have the historical data to make sure that we can do our forecasting and our recognition, and then finally we enter. Now, here's the thing. We don't enter without all of the confirmations. We do not enter without having our checklist, without our confirmations, without everything being confirmed. It's not gray, it's black or white. We put probability on our side through our trading plan. If you don't have a trading plan, you plan to fail, right? So we don't just open the chart so I need to go get 80 ticks today. I'm going to get 8. No. We open up the charts to then, first of all, forecast what is going on, what has happened overnight. recognition. Okay, what I believe that's going to happen, is that actually happening? Do I see probability rising? Do I see migrating value? Okay, do I see market structure to make sure that mitigation has taken place? Do I have proof that the market has picked up momentum? Once I have all of that stuff, then now I'm ready to move and enter into the trade. So, and then after that, we have to work on the management. So today, I'm going to talk about what I did and how I managed it. So what I chose to do today was to go 3-to-1 ratio. In other words, I'm risking $1 to make $3. So I wanted to wait for long runs. So I made sure that I bypassed those little small scalping opportunities to wait for the big target. And that's what I was able to do today. And so, and remember, our goal is just simply to be able to do what? 80 ticks. I know that says 400, and I know this has a dollar sign. Let's not think like that, because as a professional, you don't think about the money. You think about the skill. You see? So as a professional basketball player, you're playing for the love of the game, and you have the skill set that you had way before you had the money. It's the same way with training or performance skill. It's the skill. Learn the skill. Focus on the skill. Guess what happens? The money can't help but follow. Here, I want you to see this. In this particular trade, I was in this particular trade, and I was able to take pictures literally as the trade was going on. Why? Because I had ascertained everything. Through my forecasting, I understood and I realized that everything is red up here. That means this is what we call a distribution zone. So the market, what it does is it accumulates, it marks up, it distributes, it marks down. It accumulates, it marks up, it distributes, and it marks down. If you don't understand the distribution zone, you're not sure which way the market is going, and you definitely can't hold on for a long time. So look at this. At the time I took this particular trade, I was up 119 ticks. Remember, and I want to encourage you, those of you who are students and listening to this, go over to your chart trader and take off the money and make it say ticks. All you have to do is in the P&L statement box where the money shows up when you're in a trade, double click that again, and it'll just show you tick numbers. Because the money is not important. It's the ticks that's important. It's the skill, making sure you know that. So at this particular point in this trade, I was up 119 ticks. Now, this is one trade. And remember, the goal is just 80. This is just one trade. Now, as we continue on in this trade, look at that. On this one trade now, I'm up 156 ticks. 156 ticks. How could I do that? I could do that for two reasons. Number one, I know beyond a shadow of a doubt that this whole area is the institutional traders selling wooden nickels to would-be buyers who think the market is going up, who have no clue. They don't go to the Solomon Trading Institute. They don't have a trading plan. They don't have statistical absolutes and advantages through a software, so they don't even know that they were in a distribution zone. We knew. So we knew that the market was going down, not up. Now, so what happened, I also saw in this area, if you're looking here, that the market has reached what we call an extreme. So when the market reaches an extreme, it gets to a level where the volume begins to migrate down. Why? Because prices cannot stay at an extreme. Sometimes gas prices go up to an extreme amount, but they come back down, right? Sometimes they go to a low extreme amount and they come back up. So we are timing the market when it goes to extreme areas. We know how to understand it. Only 2.5% of the time will the market continue to go up after it crosses this line right here. That's an extreme area. So, number one, building my case. Number one, I knew that the institutional interpretation for the market today was down, not up. Number two, I knew that I had the probability on my side because I have reached this extreme level, and the probability said that there's only a 2.5% chance that the market will continue to go up. And then I had the market structure on my side because on my 5-minute chart, I went and found the mitigation spot. And so then, after confirming all of that, I came over here and entered into this trade on my macro chart, and I was able to stay in all the way. Why? Because what's the target? The market is returning to fair value. Now, if you're trading and you don't know all of this that I'm saying, if everything that I'm saying to you, you don't understand, you should not put another dime in the market until you get some help. All right. So that's one example there of in chart trading. So now I want you to look at this. Here is a look, and I told you, let's look at ticks. Let's look at ticks. Ticks are more important than money. Now, today I gained a total of 198 ticks, cumulative ticks, 198, and I did that on 3 trades. Do you see that? So that means I was able to make all of those ticks, and I only have to pay the broker 3 times. So on the first trade, you see here, there were 90 ticks that I was able to capture. 90 ticks. See, we don't just trade. We win. We kill. I mean, that's what we do. Money market autopsy. How does the market die every day? We kill it. We're not just trade. All right. So here we look at the net. That was 90 ticks. Now, let me explain this 3 ticks. Today I was going for a 3-to-1 ratio. Okay. The market conditions said that if they go and tap into this supply area and they start distributing, that the market must come back down to the market's objective. The market's objective from my entry was about 240 ticks away. So I knew that I could get the 80 or the 90 because the objective, the target was over 200 ticks away. Matter of fact, when I came out of that trade, that move went another 100 ticks south, another 100 ticks, right? All right, so 96 on the first one. Now, because I'm going for a 3-to-1 risk to reward ratio, once I move into profit, I move my stop loss into a break even +3 position, meaning that if it does not go the whole 90 ticks, right? So I'm giving up 30 to make 90. If it doesn't go the whole 90 ticks, it'll stop me out, right? And that's what it did, but it stopped me out with profit. So basically, I paid the broker. He's probably going to give me a Christmas card or something because I didn't make any money, but he made some money, right? Because I had to pay for the trade. All right. The third trade, look at what happened. That's why it doesn't matter if you get stopped out. Don't worry about that. Just take that on the chin because now in the very next trade, I was able to garner what? 105 ticks. The goal is just 80. So I had 198 ticks, and the goal was just what? It was just 80 ticks. So I think it's critical that that you are aware of money markets and what they can do and where they are. And a lot of people are scared of markets because they just don't know. Think about this. How much do you remember in your senior class, your senior economics class, right now? Right now, if I asked you to write a 5-page essay on what you learned, you could talk about GDP, you could talk about announcements, you could talk about anything in macro and microeconomics. Could you write 5 pages? Well, that's why you don't know this. The teacher didn't know. I was employed and I didn't know. I had to go and find out this information. I went to a library on the south side of Birmingham and pulled out every book on trade, and I ran into a book called The Wall Street Money Machine, and I learned that book and I read that book, and it showed me the different markets, and it showed me where money markets had their place. And once I learned that, then But anyway, so here, first trade 90 ticks. Second trade, 3 ticks. That's what I just showed you because I got stopped out. And then the third trade is 105 ticks. You see it? So 198. So basically 198 ticks. The daily goal is 80 ticks. So I had 118 ticks left over. So you do the math, 198 ticks times $5, right? Or if you're doing the NEQ, you still, made money. So Uh, One of the things that I want to do is I want to remind you that this is not a get rich quick scheme. Now, when you become a part of what we do, it's going to be, first of all, the best decision that you've ever made. I can unequivocally and unashamedly say that. I know it is. Um, so, so when you become a part of what we do, remember, you're going to have to take some time. You're going to have to take some time, you know, 8 weeks to just even learn kind of what we're talking about. So typically, let me get another color here. So typically, you see the first 30 days are used to evaluate and learn our highest probability trend trade analysis and management rules. You see that? All right. So then you want to use this time to start working on your ability to recognize high probability winning opportunities that will potentially generate a real opportunity for profit. The opportunity to do this will be available in both a synchronous environment, that's the daily live interaction with an instructor virtually. We have 5 instructors, as well as an asynchronous environment, online virtual learning through prepared resources without real-time teacher-led interaction. Now, the following 90 to 120 days will be spent working on the real-world application of those rules and trade management, placing live trades through simulation and replay practice without assuming any financial risk. You don't assume financial risk until you know what you're doing. Here, listen, I can't say this enough. Profitable trading is a skill. That's why we want to start focusing on ticks and not money. Money takes care of itself. Ticks equals money, but focus on the ticks. All right? So this is a skill. Now, you can't buy this skill, right? It evolves through practice, repetition, and consistent application of the high probability trading plan. You have to follow the plan, right? You can't do your own thing. Only after you sharpen your trading skills can manage the market as the plan. You see how that recurring theme comes? The plan, the plan, the plan. You don't have to figure it out. We've already figured it out. We're going to show you what to do, and you just learn to follow the plan. Now, the time frame relative to risk and real capital, remember, this is a skill. 8 weeks, a lot of people spend 5 and 6 years in school and learn a skill that they can't even get a job for. All right? So now, those without successful trading experience need to plan on at least 90 to 120 days. Well, what's 90 to 120 days to take 5 grand and turn it almost to a $500,000 in 12 months potentially by just simply going up on your contract because you can make 86? 120 days, that's nothing. That's a drop in the bucket. But now look, those without successful trading experience, and we have many people who didn't have any experience whatsoever, right? They didn't know a candlestick from a trend line. All right. Those without successful trading experience need to plan on 120 days before being able to effectively and profitably execute all the rules. There, listen, there's that word again, plan, the plan, the plan. Now, we don't offer personalized trading advice at all. Personalized means, hey, listen, how much money you make, when are you going to retire? Okay, so you ought to trade 10 contracts because your account. No. You would be subscribers if you come to the education room, and as a subscriber, I can talk to the general boot, but no financial advice. I'm going to make sure that you know what you're looking at. You have to know what you're looking for. Okay, so you need to make sure that you understand everything that we're talking about. Listen, do not risk real money while you're building your skill. You have to take this seriously because it's estimated that 95% of people without enhanced trading skills will lose money. It doesn't make sense to do that because we're going to teach you, show you every step of the way. Focus, that's the thing. Focus on enhancement, not money. That's why we're going to look at ticks from now on, not money, because that's the wrong focus. Focus on the ticks. You do understand that this is not a get-rich-quick scheme. There's nothing in life that you can get for nothing. And if you get it for nothing, I would run. I mean, it's just that simple. Understand that that is possible, that you may never make a dime. You could lose money without enhanced trading skills. For example, if we tell you what the plan is and you do something different, it's a possibility you'll never, because it doesn't work 3 or 4 different ways, right? It works one way, the way we teach you, all right? Participation is vital. Now, it's very important that you understand that you will not obtain skills by osmosis that you did not possess prior to learning how to use our analytical software. Also, note, you cannot practice the wrong thing. Well, I just wanted to see what happened. Is that the trading plan? Well, no, but I knew it wasn't. But I just wanted to see what would happen. That does not make sense. All right. So you must understand that this will be an ongoing process, right? That will include correct trade recognition, application of the rules, combined with the feedback from coaches to help enhance your skills. So you go through your orientation class, your freshman class, your sophomore class, your junior class, your senior class, and then you move on to what we call continuing education. That's the class that I teach, because you'll never stop learning. You just get better and better and better and better and better. All right, now we believe again that participation is the most important element to your success. Daily support, daily support. Nobody on the planet is doing what we do. Daily support is available through annotated chart feedback. In other words, there will never be a day that you traded the previous day and you have to go to the market a second day and you don't know what you did wrong, or you're confused, or you're frustrated. We don't allow that to happen. We're here for you, okay? All right, so, and we do this every single day, right? So Q&A submissions receive real-time feedback so that you can position yourself for success. When we have Q&A sessions, and they will be expanding to evening time, some middle of the day, as we continue to grow. But when you come to those Q&A sessions and you have a question about your chart, you submit that chart and you get real-time feedback. Now, when you have a full understanding of the following components, you will have everything that you need. The following components. You will have everything that you need to position yourself to become consistent, profitable, confident, and an independent trader. Number one, we just went through it. This is our trading plan, forecasting. Number two, recognition, right? Our POP, our probability of profit. Then guess what? Interest, knowing when to execute a discretionary entry, all right? Then guess what? Management, how to understand how do you manage the trade once you are in it, and then exiting. This is it. This is it. Oh, yes, sir. Yes, ma'am. This is it. When you learn this, now look, it's vital that you recognize that's step 2 in the trading plan, trades before they happen. That is why I know they're about to happen, and while they're happening, I have the flexibility to go over and literally take pictures for you. Because it didn't shock me. I'm like, oh, there's a trade. No. We watched it. We saw it. We watched the composite operator. We watched the institutional leadership. We watched the buy-side institution work. We watched the sell-side institution work. We watched them mitigate those positions that they bought and they sold at a premium. We watched them buy and run that market down to a discount. We saw all of this happening. And as it was happening, we just participated. Hey, listen. This is a great opportunity for you to become a part of what we're doing. And again, this is something that you absolutely should have learned, in high school. But that's all right. We're going to learn it now. Again, if you have any more questions, go to our website, text the word profits to 94253. Go ahead and book a call today. When you're tired of being sick and tired, then things will change. If you won't get different results, you're going to have to do something different than you've been doing. And those of you who are traders and looking at this and you're not profitable and you're breaking even or below, hey, look, if you keep doing what you're doing, you're going to keep blowing accounts. You're going to keep doing the same thing. But guess what? We can help you. Again, I'm Cornelius Wilson Brown III, author of the Money Market Archives and Money Market Edge software, Solomon Trading Institute. Hey, listen, we'd love to, have an opportunity to be a positive influence on your financial future. God bless you. Have a great day.